Hello, joining me today is Matthew Tillet, Fund Manager of the Brunner Investment Trust. Now, Brunner describes itself as a one-stop shop for investors looking for global growth opportunities and dividends that rise over time. So you've got a portfolio of well-known companies from around the world. How do you decide which ones to invest in?
Yeah, so we have quite a clearly defined investment philosophy and process when it comes to stock selection. And so what we're really looking for is a combination of three attributes: growth, quality, and valuation. And it's the combination of those three that really determine the stocks that we buy for the portfolio. And from a growth perspective, what we're looking for here are what we're interested in really are the longer term trends. So secular or structural trends that are going to outlast an economic cycle. And we want to understand how those big changes, like things like digitalization or aging populations, how they're going to impact different industries and different companies. And we're looking to find companies that really are the right side of those long-term trends. And then the second thing, quality, is really about trying to find companies that can benefit from those growth trends. And this is actually really important because there's a lot of examples throughout history of companies or industries that have grown a lot but actually haven't really delivered much for shareholders because those industries haven't lent themselves well to the attributes that we're looking for. So we're trying to find companies that have sustainable competitive advantages. They have barriers to entry around their protecting their business models, and that allows them to make sustainably high profitability, which means that as they grow, an element of that growth comes back to us as shareholders. And then from a valuation perspective, really this is about not overpaying. So we want to make sure that there's still a significant amount of upside for us to benefit from, as those growth and quality attributes play out over time.
Healthcare represents a large part of the Brunner portfolio. Now, I presume you're not a scientist, so how do you know which companies in a very complex sector are worth backing?
No, I'm not a scientist. We do quite often use people with either scientists or science, a lot of science-based knowledge to help us with the specifics, as you can imagine. I think healthcare is a good example. It kind of illustrates very much the process and those attributes that we're looking for. I mean, this is an industry that, at a very kind of top-down, 30,000-foot view, is very much benefiting from some longer-term secular trends. On the one hand, we have aging populations around the world. It's not just a Western phenomenon. That's something that is going to continue to happen, and that means as populations get older, there's just more of a need for all sorts of types of healthcare. But the other factor is that we see this general rise in incomes and wealth around the world, and as that happens, there's an increased ability to actually pay for these services, which in some cases are quite expensive, and so that means that you tend to get sort of increasing share of wallet spend over time. This is particularly true outside of the US. Actually, the US is already quite advanced down this process, so that's a kind of a pretty attractive long-term growth driver. But then, importantly, it's also an industry that lends itself very well to the types of quality businesses that we look for. You often find in the healthcare sector that you have the healthcare sector is really there's a whole lot of different subsectors within it. So we're talking very broadly here, but if you take many of those different subsectors, like for example pharmaceuticals or medical devices, what you tend to find is that there are on the one hand pretty high R&D and technology requirements to get into that industry. There's a lot of upfront cost, and the incumbent businesses, they've typically been around for a very long time, and because of that, they have entrenched positions, and it's very difficult to disrupt them. There's also a lot of regulation in this industry. It's a highly regulated industry actually, and that again tends to favour incumbent businesses because they have the capacity to navigate those regulations and deal with the costs that they entail. So overall, it lends itself pretty well to that sort of scale economies that you can see many of those many businesses in the sector and the companies that we hold have, and they are very profitable businesses that have have sustained high profitability for a long period of time. So that's why we like it. I mean, as I say, our investments they're spread across a number of subsectors within the healthcare industry. So it's quite a broad exposure.
Brunner's seen quite a few changes in recent years, including a change in lead fund manager and one of your long-standing shareholders selling out. And now that you're in charge, have you changed the strategy at all?
Well, we certainly haven't changed anything in the investment philosophy and process. It was working very well before, and it's still working now. I was obviously heavily involved before I became lead manager as well. I was the deputy manager for a number of years. I suppose where there perhaps has been some changes, we've brought a couple more colleagues onto the team as portfolio managers. My two co-managers, Marcus and Christian. Clearly, this is a very sort of individualistic job. People have different views, different levels of conviction, particularly when we're very fundamentally driven and stock-driven investors. So there's been one or two changes in the portfolio that reflect that. In fact, LVMH is an example of that, which was a position that we added kind of shortly after the change in manager last year. But I sort of regard that more as kind of business as usual, really, because as I say, we're certainly not changing anything in the actual investment philosophy and process.